Hello, this is the Chartprofit video, approaching 2 hours into the trading day on Friday, the 3rd of June. It's been a weak jobs report out today. Seems to have lessened the chances of an imminent rate hike. Dollar has fallen to a 2-week low. I'm seeing some movement in the controlling price levels or points of control, which we will discuss. So some changes in support and resistance levels. This is the pre-open today, showing the emini S&P. I'm not going to go into too much detail here. Have a look at it. Includes the important analysis over the last few days. Expectation when you see a day with significant buying marked twice. So on Thursday we had reactive buying down here. That's the green here, and aggressive buying at the top, auctioning the emini to a new high for this move. There's a strong expectation to see that high during the next day's session exceeded. Actually, what's happened today following that jobs report is we've seen the emini printing down here towards the low of the week. That's unusual. It does negate any kind of short-term positive implications of this buying. We'll see where the market finishes the week. Let's see if there is any real damage technically. Let's just quickly review here on the auction chart. So this is what's happened over the last few days. 2041 was our point of control, our big support that we were watching, if you remember. The support held really well. We were seeing value areas printed just above it. And then we saw one day here where the emini opened below it, generated a value area below it and closed quite strong. And then we bounced right back. So that's like in the longer term, just a test of this level, and a rejected test can lead to a sharp move in the opposite direction, and that's what happened. So we marked buying here and here. No sign of any significant selling since this day over here. Overnight in this period here, the major moved up to 2054.50, and that's really now the big support. The point of control of the current distribution remains at 2041. It didn't move. It still gives me a projected target up around 2120, unless that number there, 2041, unless that point of control shifts and migrates somewhere else. Over the last few days we have seen quite a lot of improvement. This is the spider. You can see the imbalances off the emini marked on the chart here in green and red that I just showed you. The breadth has improved. In here we've gone back to green. Price momentum has picked up and gone positive and is still heading higher. This is a much improved pulse chart. Certainly over the last, well, we can see here it turned pretty negative here in mid-May. We've come back. It's a much better looking chart right now, and as long as the spider holds above this level here, which is 205.40, that's big time support. Most importantly, as I'll show you on the chart in a minute, that is now the major. So as long as we hold above that level, spider's in a strong position. As long as the pulse chart looks like this with plenty of green, these green imbalances in the short term are like little triggers which I would expect to send the market higher. Obviously the one that we saw on Thursday, the significant buying mark twice, that one didn't quite pan out in the very short term as I'd want. And if we just look at the current live chart for the spider, here's that big level at 205.40. That is now the major. Became major recently, so that's the big support. Previously the major point of control was up here at 209.90. There is a possibility that with time spent oscillating around like the level, that major could migrate back up. That's not the case right now, but we're kind of up around levels that late last year and in April this year turned the spider back down. So we're up here again. Obviously price consolidating above that level would be a bullish indication. Here's the Russell 2000 ETF IWM. The major is at 115.35. Yesterday, strong close above it. We have the halfway point here of last year's high. That's a big level to watch for support should that be broken. I thought there was a good possibility that this level at 115.35 will actually send IWM straight back down, but we've exceeded it here. That's a sign of strength. If we can recover today and early next week and print some time above that level, again that would be a positive indication. Currently we're just printing just slightly above that level. We had our major support on the Qs identified at 105.13 going into May, and that proved to be really strong support. We had like a little double dip here, and we've come higher pretty swiftly. And the diamond's currently holding its 2-year support at 176.50. This is the UK's Footsie 100 chart. This week holding above 61.39, the 12-month support. The big level for this is just slightly higher relative to this chart anyway, just above 6,300. That's the halfway point of last year's high. Price back up here for the Footsie would be a much stronger price location and be much more encouraging and positive. As we've been mentioning, the US chart, certainly the spider, the large cap indices, much stronger relatively than the European. You can see here the DAX, the German DAX index, holding above its major, which is 97.40. So all of this consolidation in the longer term is encouraging, but the big level is the halfway point again, which is a little higher up here off last year's high. And again, this in the longer term is weak price location until we can get up here. Correction on any time frame from the high to the low, mark the halfway point. I'm usually much happier about the chart if we can print some time back above that established halfway point. In the pre-open today I said that TLT, T-bond ETF, had closed back above 130.77, the 8-month point of control in a stronger price location. That 8-month point of control is now actually the 3-year, so a much more important level. And that 3-year point of control migrated to that level right here just in the last couple of days. And as we know, migration of a point of control of some importance will often happen just before a directional move. Well, we've seen TLT pop quite a bit higher today. There's a big gap in here, but we are now in a stronger price location. This looks like a pretty strong chart. Last week I said we had some doubts about the strength of the chart in the short term because it was printing below that point of control, but I did say that in the longer term all of the price action just about this year had taken place above that level, which was strong in the longer term. Now I'm saying as long as it holds above 130.77, this chart looks strong on both time frames. This is the comment, pretty much unchanged over the last few days, for GLD, the gold ETF. As we know, last week we broke below 118.22, which is the major point of control. That put the chart in a weaker price location. And I said the chart had stalled and held at 115.50, which was previously the major point of control, and also the April low. I'm saying and assuming that this is valid support and therefore price below this level would be weaker price location. So here's the chart. The major point of control was previously the big support at this point here was at 115.50, and then it migrated with this kind of price action up to 118.22, up to there. So that is now, or was the big support. We broke it here, but we have once again held 115.50. So today we've popped right back up above the major, which puts it back in a strong position. Price down here, we've now got proven support, and there's valid reasons why it's proven support. And if we see price back here, that would put gold in a really weak price location. But currently it's strong here. USO, the oil fund ETF, 6-month point of control is at 10.78. That moved to that level at about this point. We migrated higher, and we found support there, and we've popped higher again here over the last couple of weeks, and there's been this consolidation at this higher level, but no sell-off of any significance despite these sort of negative looking technicals. We've got this negative divergence with the momentum indicator here, and we've got the stochastic derivative and other oscillators turning down, but currently we're holding quite well within this range here. Either way, the big support is a bit lower here at 10.78, and as long as price holds above that level, in the longer term, oil's in a strong position here. Okay, now for the big movement on the day, this is the dollar. You can see the decline, sharp decline in the dollar index following the jobs report today. The 2-year was at 94.79. That's actually migrated up. It's just done that to 95.25. Literally done that just within the price action just here. Right, so now we have support here, the halfway off the low to the high, just below 94. We'll see there's been some other migration of these points of controls on some of the other currency charts, and when that happens you often see these charts moving directionally. We've seen quite a decline today. If you're bullish on the dollar, you'd probably want to see this level here hold just below 94. If we see price printing time below that level, it always suggests a retest of the low. So the bottom, the low to the high, the halfway point, consolidation under there, as we've seen many times in these videos, will often lead to a retest of the low. So what we want to see is this support hold if you are bullish on the dollar. Let me talk about some of these charts. I'll comment each day in the pre-open. For the Euro FX chart, important level has been the 3-year point of control at 111.98. That's this line here. And what we've been seeing is a consolidation over the last few days below that level here. And that's a weak pattern, but what we have is the major support just underneath it here, which is the halfway point from here to here. And we've been talking about that support in the pre-open and saying that if we printed time below that level, again, that would be really weak price location. But we have seen no price action like that. What we have seen support here, and we're now popped right back up on today's big event. Let's say surprise jobs report, and we're now pretty strong up here above this level and this one. So as the dollar showing weakness, this chart here is showing some strength, as is the pound against the dollar here today. We've popped up, been pretty volatile price action for the pound. We have the Brexit, or possibility of Brexit, on June the 23rd, and that big event risk is causing some swings here. Chart has held the halfway point off the low, which is always good. And here's the 8-month at 142.60. Now that was the 8-month. Again, we've seen a migration. So this level here at 144.32, just in this little price action here of the last couple of days, has shifted or migrated the 1-year controlling price to 144.32, and then puts the pound dollar chart, at least for now, in a strong price location. Pound pretty weak against other currencies. It's more the weakness in the dollar that's lifted the price today, but the point of control has shifted to that level, so that's an important level to monitor. Price would below there, especially price below this halfway point, would be a really weak chart, likely to be a volatile chart over the next 2 weeks. I just want to finish by pretty quickly moving through the sentiment charts. This is the Ridex ratio that I follow on my version of it. Just point out once again, we've seen quite a rally off the low in February, which was where the Ridex ratio hit its extreme low over here below 3, and really hasn't rallied very much, indicating that the private investor has not participated in this rally very much and doesn't seem very keen to do so. That is not usually bearish for the market. This is a contrarian indicator. If I look at the bull funds in isolation, or the assets of the bull funds in isolation, you can see it remains pretty subdued here. Bull fund assets are low. Bear fund assets have been rallying slightly as the market corrected from mid-April, but even as we've rallied for the last few days, bear fund assets haven't really declined very much. But we've seen some bulls, certainly in opinion rather than action. We've seen some bulls emerging here in the public poll from AAII. The bulls percent this week was sharply higher at 30.2%. It reached 17.8% previous week, so it's quite a jump. But the previous week at 17.8, that was actually the lowest since 2005. So kind of at this point here, the bulls percent, or the bullish sentiment, just reached an extreme low, which is kind of surprising when you look at the chart and where we're sitting at the moment. Bears percent was almost unchanged this week at 29.1%. Same thing in the investors' intelligence polls. We saw bulls percent higher again, quite sharply at 45.5% from 35.4%. So it's quite a jump in the bull percent in both the AAII poll and investors' intelligence. It's very unusual to see in the investors' intelligence such a sharp move in bulls percent, and actually if we look back just 6 weeks ago, bulls percent reached 47.4. Now that was the highest level of optimism since July last year, and we're pretty close to that now. Again, not much change in the bears percent this week, but maybe because we're approaching these old highs here, but there is some interest from the bulls percent which has picked up strongly. Just emphasizing those two consensus polls. reflecting what people are saying or their opinion rather than what they're actually doing with their money. We're looking here at the Lipper US fund flows. Like the Ridex, this is real money. This is a reported equity fund including ETF. Outflows again this week, smaller but still an outflow, 776 million in the week to the 1st of June. The 4-week flow number in black here, still a negative 15.58 billion. It's up from the previous week's 26 billion. That was the lowest since January. So we're kind of down here on the 4-week flow. And this is where you usually see that indicator positioned after a considerable sell-off like this one and this one here. Okay, that concludes. Those levels will be in the ebook on Monday. Just for now, I'll just wish you a good weekend and thank you for watching.